Good afternoon. Thanks for joining us for our presentation with Good Natured Products. Really excited to have them to come back on the show. We've had them twice before, so if you're new to the story, I would encourage you to take a look at the previous webinars that we did, because this one really is going to focus on their latest quarter and also their latest transformative acquisition. Before we get started, a couple things. There will be a Q&A period, so feel free to input your questions in the Q&A box at the bottom, or you can email them to me at deborah@adcap.ca. And this presentation, as always, will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And with that out of the way, I'd like to welcome back Paul Antoniadis. Nice to see you, Paul.
Oh, that's great to see you. Thanks for having me back.
You're welcome. Third time's a charm because I got your name.
It was perfect. It was perfect.
Yeah, congratulations. You put out a really great quarter, a fundamental one where you're EBITDA positive. And every time I see you, you've got another transformative acquisition to talk about. So certainly keeping things interesting at Good Natured.
Yeah, we are, and, for folks that, are new to Good Natured here, I'll just maybe ground ourselves on our North Star of, what we're doing and how we're deploying our owners' capital and the type of company we're creating, and in the manner in which we're creating value for our owners. So our North Star is to become North America's leading earth-friendly product company, and we're going to achieve that by creating the largest assortment of plant-based products for consumers like yourselves and business owners and operators can use as an alternative to the plant-based products you use in your home or in your businesses every day to run them. Now, that product authority, as Derek highlighted, is going to be created in two different ways. We're going to do it organically, where we design, build, and take the product to market, or we go and acquire companies. It can be plant-based or petroleum, and then if they're petroleum, we convert them into a series of our plant-based materials, and collectively, through our organic effort and through our acquisitions, we build this one-stop shop for all your plant-based needs, which makes it easy and affordable for consumers to begin switching away. Now, our first quarter was a smashing success. Like, we grew just under 160%. Gross margins were exceptionally strong, and it was our first, very strong positive EBITDA performance. And I think that really demonstrates our team's ability to execute our overall growth strategy, which I highlighted just now. And we obviously want our growth to come, half of our growth to come from acquisitions and half of our growth to come from our organic initiatives. So it was a really, really great quarter, and I think it was a good start to the year, that's for sure.
Great. Paul, maybe you can give a little bit of background on yourself, because you have quite a lot of experience in consumer products. And then also, I'd like to hear a little bit more about XTEC Plastics.
Yeah, well, good. My background, my business background is from the retail industry. So I, for the most part, grew up with Best Buy when they were emerging out of the Midwest. And I held lots of different roles, and they're a terrific company. My last role in the U.S. business unit was the Vice President of U.S. Sales Development, which was, both a strategic work with the commercial teams, build a strategy, and then my team also executed it out in the field. And then when Best Buy started their international business unit, they appointed me to a senior executive over the international business. Now, it's good to have that context because Good Natured, business model and strategy is really framed around the retail industry and consumer product industry. And this product authority strategy, being a one-stop shop for all your plant-based needs, is really what great retailers do. Is whether you look at Amazon or Home Depot or Lowe's or your favorite clothing store, like, you don't go shopping to a retailer that just has one pair of shoes, right? You want choice, and that's what Good Natured focuses on. We want to give our customers choice of materials, choice of products. Today we're offering 400 products across 5 business groups, and we have we don't have a stock item that you like, we can actually design, manufacture, make the mold for you, and design and deliver a product that meets your business needs. And I think giving that customer that choice has really been a big winner for us. And, it's really being really well received by customers of all sizes. So I think, I'm not obviously the only retailer inside the company, and we have a series of great retail people, along with manufacturing and engineers. So today, our team is, I think we're well above 160 people, and growing. So, we collectively focus on executing this strategy every day, and so far, so good.
Can you talk a little bit about the different products that you have and the different materials?
Yeah, so if you look at our product segment, our product business groups, and maybe what I can do is just share a visual in the background. What we do is our business groups are built around kind of 5 key, we call them market value pools. One is packaging. So in packaging, we have what we call departments and categories and subcategories. And some of the big departments are like, we do food packaging, we do food services like takeout containers, we do medical packaging, and we do what we call our general merchandise packaging, which is a series of industrial product lines. And then we offer general merchandise. So if you think about general merchandise, anything in your kitchen that's made from petroleum, you can look at that and say, gosh, someday if Good Natured doesn't offer it today, they will offer a plant-based alternative. And then our commercial business and supplies are like, think of pallet stretch wraps. So these are things that our customers use to pack up their products and take them to market. And the industrial business group, which is where the recent XTEC acquisition falls under, is this on the bottom right here. I don't know if you can see my little mouse scrolling around it. Is if you look at our industrial segment, produces truckloads of this we call thermoform roll stock, and we ship this out to thermoformers, and then they stamp out their own packaging, and then we buy any type of post manufacturing waste back from them. And that segment covers medical roll stock. We sell roll stock in the medical, we sell roll stock in the food services, we sell roll stock in the food packaging, ESD, and general merchandise. And then services kind of underpins the service offerings underpin the different business groups. So they're obviously not plant-based, but they're like design services and mold making services and financial services are being offered to a series of customers across the business groups. And then if I may just talk a little bit about the customers, we are now serving over 600 recurring B2B customers, and they range from national accounts all the way down to small businesses. And then we also are a retailer. We have our own e-com channel. We sell our general merchandise there. We sell our packaging there. We're on pace to do well over 20,000 transactions. And we also place our products in physical stores, our general merchandise products. So it's this product authority. The more products we put into this business model, the more diverse customers we put in this business model, the more formidable we become as a competitor in the market, and the more delightful we are to customers, because the customer knows, hey, I may be starting with 3 or 4 products, but I have a supplier called Good Natured. Not only are they good natured and wonderful people to work with, and they service me just brilliantly, I have all these other products that I can eventually transition over to. So that choice comes from our products, but also our materials. And this will be the last answer to your question is we offer our products in fiber. A lot of that is in food services, but our fiber also has rigid containers. So the base could be fiber and the lid could be rigid. That could be in a bioplastic material, that rigid top. And that bioplastic packaging is basically designed to commingle with 100% petroleum packaging downstream. So if you recovered our bioplastic package or product and you flaked it to be recycled and reused, and you did that with 100% petroleum, you can actually mix that together, make another product. The biodegradable line is fully compostable. So these are really designed for customers that are really concentrating on the closed loop process, where there's a good industrial composting facility infrastructure in their state or their province or their city. And, they basically say, hey, it's going to come into food contact, and if there's any waste, take the food, take the package, put it into industrial composter. So whether you use bioplastic or biodegradables, you can make the same package from it. But we give the customers these options, and when you give customers options, you close more customers.
That's interesting. I have a question about XTEC. So you showed us what it looks like, or what the materials look like before they are producing containers. Do you have any pictures of what types of containers can be produced by XTEC?
I will tell you, I'll give you an example.
I like the visuals. Helps me understand things a bit better.
Yeah, no, sure, no problem. I totally get it. Let me see what I can do here. So, for example, like we've announced a very interesting takeout, what we call our ToGo container. I'm just trying to pull up a visual of it. I believe I may have it here. Give me 1 second. And this ToGo container is basically, here I found it. It's dishwasher safe. We put a lot of design into it, and we really created this container as an alternative to what the Canadian federal policy is proposed, which is the banning of black-based containers that are not recyclable. A lot of packaging that comes into food contact is not recyclable, meaning you can't recover it because it's covered in food, right? Food oils or contaminants. So a compostable option is a really good option. And even the federal policy says that renewable packaging is a viable alternative to these products. So this material is a proprietary material. This is material our material engineering team, which are fantastic. I call them chefs. They're fantastic chefs. They created a material recipe that is fully compostable. This is produced inside our own facilities, or that industrial roll stock I showed you, and then we produce them and stamp them out at our packaging facilities, both in-source and outsource. So now the material's it's great that the material is safer, but we really concentrated on making it leak resistant. We want to make sure it's really stackable. So, whether, I don't know which is your DoorDash or what your favorite food delivery is. I mean, there's so many of them now, right? When they're in the bag, like the last thing you want to do is, as a customer, you want to open it up and that stuff's spilt all over, right? It's like it ruins the start of your dinner or lunch. So we understand that, and these containers provide a renewable alternative, but also designed to support our customers' focus on making sure that the package is also leak resistant. So this is a classic, example of our defensible moats and our product authority and our choices and our options that we offer our customers. And I got to tell you, it's been really well received. Like we've gotten a real positive response in the market, and we think this material eventually could find its way into consumer products. But for now, we're really focused on the fresh takeout market.
And it says it on your slide, but it's fully microwavable.
Oh, it's fully microwavable. It's dishwasher safe. So this is kind of a product where I don't know what happens, after you have your takeouts. Like some folks, they squirrel all those containers and they reuse them for their leftovers. And, this is just another great option when you're done enjoying your meal. You can warm it up in a microwave, or you can reuse this product in your home as for leftover storage after you cook a meal at home. So we're pretty excited about this. I think this really demonstrates our design and our technology side. Like, we're an innovative company that just uses the safest materials available out there to help our customers start taking that step forward in using products made from renewable
I know it is part of your business model, but this is competitively priced versus the incumbent takeout products.
Yeah, absolutely. It's affordable price. Like when we focus on making things easy and affordable, uh, price is a component of that, right? If you're pricing things 4 times higher, it's not really easy to make a switch, right? So the short answer is yes. It's definitely, we look at this pricing as it should not be a resistance for customers in making the switch, for sure. Now, if they're using styrene, which is one of the cheapest materials in the world, as a high heat material, they should stop using styrene, because styrene's been deemed as a based off Proposition 65 as a hazardous material, and so that material's obviously our container will be priced more, but polystyrene in a lot of states and provinces is being banned just because of the danger it has to humans.
Mm-hmm. Oh, it's interesting. I'm always skeptical, when you get those black takeout things, if you should stick them in the microwave or not. I suspect not.
No, you should not. Like, you got to remember that plastics do leach, including ours, right? When in certain type of environments, and there's been a lot of third-party research that shows the level of microplastics that are entering our body. Like a lot of folks focus on the oceans and the straw. That kind of image of that straw and that sea turtle's nose is burnt in a lot of people's minds. And I tell people, like, listen, if that's happening in our oceans, what do you think is happening within our bodies? And I think this just creates an alternative for potential customers to move to a safer container, and not just for this specific to-go container, but all of our packaging.
What is the total addressable market of takeout containers like this in North America?
Well, I mean, if you take packaging as a whole, it's $1 trillion worldwide. So it's massive, right? It's huge. And, you can take kind of the normal metric to use is about 35% applies to the North American market. I think it may vary a little bit more depending on the category. So it's quite large. It's quite significant.
And what proportion of that market do you think you can capture with your current production?
Well, I mean, we're focused on executing on our strategy, right? So if you think about our growth rate of 160% in Q1, and now with the XTEC acquisition, if you take their 12-month FY20 performance, which was about $33 million in revenue, and you fold it into our IPF acquisition and our annual numbers, like we're well north of 60 million. This is not forecast, this is historical on TTM basis. So, although that's very exciting, it's just under 300% growth from our FY20 annual audited results. $1 billion company is still a very small share overall. So, we believe we've got a very large company here in the making. Obviously, we need to continue to focus on our growth strategy, which we are doing quite well. And I think doesn't require a very large market share to grow a company to $1 billion in annual revenue. So obviously we got to take this a customer at a time and a delivery at a time and a day at a time. But the team's done a great job. Like it's our third acquisition in less than 12 months, and I think that's a great indication of our team of leaders say-do ratio. I think we've spoken as our third time together, and I think you made a comment before we got on, like it's amazing how much the company has changed just since the last call. And I think that's just an example of how well our strategy is working and how well we're executing it.
Yeah, but even before we ever met, like I think in 2017 you did 2.5 million in revenue, right? Like that's a phenomenal growth rate. And I know that you look at your organic growth, your acquisition growth. I know you're not guiding the market on either of the categories anymore, but I guess you have been growing really aggressively. And one question that pops into my head is like,
sure,
Do you think there's sufficient organic and M&A opportunities to keep up this rate of growth, or should we expect it to flatten out at some point? Like, what's your sort of view on the market? Because obviously you've seen this explosive growth, but at some point it's going to start to flatten, I would imagine.
Well, I mean, I would kind of look at the best way to predict us as a company is look at our past behavior, right? And that's the best leading indicator. And if you look at the way we've positioned Good Nature to our owners, is we are a growth company. We're focused on delivering on growth. We're using growth to separate us, and our execution of our strategy to separate us from other investment opportunity within our sector. But we're going to grow with discipline. We're going to do it with really good margins. We're going to do that with stable margins. We're going to do that with EBITDA improvement, year over year. And so far we've done that. Now, your question on what's the possibility? We have a very active acquisition funnel. We have a very active organic funnel. We have a very active new product roadmap like the ToGo Container. So we're quite optimistic. Now, I'm sure your listeners hear that all the time from CEOs, but the difference is we actually get things done. We actually do what we say we're going to do. And although we don't give guidance, I always tell my owners or potential owners in Good Natured, just look at our history. Go back to 2017, 2016, 2015. Remember in 2015, we did roughly $65,000 in sales. It was the most glorious $65,000 we ever did. Champagne was flying all over. It was great. And here we are, third acquisition. Historically, looking backwards, it's collectively around 60, 65 million. So, I think that should give quite a level of confidence to your viewers and listeners that, this company is not just saying they're a growth company, they're actually acting like a growth and executing like a growth company.
Yeah, agreed. And in both categories, which I like to see. You mentioned a couple of things that you look for in your acquisition strategy, and we've talked about it in greater detail in past webinars, but I think it's important to outline, because you do talk about the discipline that you have, sort of what you look at in terms of acquisitions and how XTEC Plastics fits into that conceptual model.
Yeah, so what we do is we have a strategy team that's led by some terrific people, very smart people, and I call them psychologists. And what they do is they go out and they look in our value chain, which is kind of a fancy word that says all the products that are made in petroleum within our targeted value chain. How big are those markets, and can we extract value with a plant-based alternative? And so they go study that. They study the products, they study the competitors, the positioning, the pricing, the product features, the benefits, and then they provide direction. They say, hey, I think we should go organically and just design and build like the ToGo Container. Or they'll say, hey, here are a series of companies that you should go out and acquire. And these companies have to fit, whether they're plant-based or petroleum, have to fit a specific criteria, which is, number one, does it give us access to the categories that we want to extract value from in the market? In other words, does it open up a new category? Two, does it strengthen our position in a current category by adding more products into it or gaining more share within that group of products? These companies have to have lots of customers. So we don't want to acquire companies that have one or two products with one or two customers, because it's just too risky, right? For us as owners to acquire a company that's very narrowly focused. So we want them to have lots of products. We want them to have lots of customers. And then if they're petroleum, what we'll do is we'll convert them obviously to one of our materials. And these companies need to have a level of positive EBITDA. Like we don't want to go out and acquire a company that is going to put pressure on our balance sheet or require us to do a significant overhaul in the business to get it back on track. So we want these transactions to be, at market value. We want to represent what the market's paid for these acquisitions. We don't want to overpay them, and we don't want, obviously, with a lot of these acquisitions, some of the owners are staying on and helping us operate the business. So we want to make sure that it's also fairly priced but also creating value for our owners. So I think we've done that so far in all of our transactions.
Are you focused on certain regions or certain product lines? How are you prioritizing potential acquisitions?
Well, like for example, with let's just use XTEC as an example, right? So that falls into the industrial business group. So we really first of all, we've known XTEC for a long time. They were our outsource partner. They're also the owners or shareholders and good natured. I think we press released, we've known them for over 6 years. I think it's more, I think we've known them since 2012. Lots of history, a lot of money exchange, a lot of negotiations, which, and here we are. When you can exchange money, commercially discuss or argue and work really well together. Like, we've grown our business with them quite successfully. We were like, hey, this is a really good fit because it's a complement to the IPF acquisition. There was very little customer overlap. Collectively now in our industrial segment, we're serving over 200 thermoforming customers. These are customers that also stamp out packaging. We can offer those customers the widest range of materials and additional services to help enhance their positioning in the sustainable packaging market, which we all know that's the direction that the industry is moving towards. And you got to remember, we use that industrial roll stock for our own packaging. So, we acquired Shepherd's and then IPF, which are about an hour apart. We use that roll stock to produce our own packaging. And so XTEC just creates a larger foundation for us. I think collectively now good natured has the capacity to produce somewhere between, before our high-speed machines get put in place, around 60 to 70 million pound capacity. I think once we put the two high-speed machines, one in IPF, one in XTEC in place, I think we'll be close to 80, 90 million pounds of capacity. That should be a leading indication to your listeners that we're truly committed to the industrial segment, but we're also committed to the packaging segment and being a leader in it. And so we also look at the supply chain strategically. Does it enhance our supply chain? Does it strengthen it? And obviously XTEC did that. And it also further diversified our customer base. I think going forward, I get asked, well, where are your other acquisitions? Like, well, just look at our business groups that I had shown earlier on the screen. Like, we're actively looking at acquisitions within the business groups. Obviously, I don't foresee an industrial acquisition here, so I think you probably could exclude that one. But definitely still pursuing acquisitions in the others.
Are there other regional markets that you'd like to enter, that you're looking at entering?
I think we're just going to stay in Canada and the U.S. Like they're huge markets, right? The U.S. and Canada. They're very complementary. We do probably, a little over 60, and it's in our MD&A, the actual number. I think it's around 60 to 65% of our business is U.S. The rest is in Canada. And, obviously it ebbs and flows depending on customer mix and and onboarding new customers. But I can see us maturing over time in the U.S. and Canada, where 80% of our business will be U.S. and 20% will be in Canada, and I don't see us changing that focus in the next several years.
And can you talk a little bit more about the single-use plastics ban and where we're seeing it's being implemented in various regions? How is this helping your business? Are you specifically targeting to grow in regions where governments are starting to create policy that limits or restricts plastic use?
Yeah, it's actually the single ban plastic banning of single-use plastics is actually a positive thing for us. It in a couple different ways. One, it drives innovation, right? It forces the market to innovate, which is right into our wheelhouse, where we can provide an alternative to some of those single-use plastic products. Some of those single-use plastic products, candidly, should disappear. I think stir sticks is a classic example of one that I'm not sure that's the best use of any type of material. And then, it causes awareness of change, and it strengthens our tailwinds of people looking for alternatives. And it's not just the materials, it's in the design, right? So can good natured design a package that uses less materials, is right size, that optimizes the retail shelf space, allows me to ship more packaging per case, per pallet, to lower my being able to deliver more product within my existing or reduce carbon footprint. So we work with lots of customers with different business objectives and different sustainability objectives, but the ban itself is driving that awareness and market demand. And that's nothing but good news for us at Good Natured. Now, I just want to, you've heard me say it before, we're not building a company around government policy. We don't need those bans to be successful, but they definitely help us for sure.
I had an audience question that was related. So how many solutions are you offering to the coming plastics ban?
Well, I mean, quite a few. I mean, I just highlighted one, right? So, in Canada, for Canadian listeners, there's this whole federal policy that's being finalized coming into the end of the year, and renewable materials is being positioned as a strong alternative. So whether you're looking at food packaging, food services, medical packaging, we do a lot of business in medical packaging, or helping a thermoform company that to help make the switch. Like, we're happy to sell our industrial roll stock to thermoform companies to put them in a great position also. So, we provide a lot of choice to our customers, big and small. So if you're a thermoformer and you're faced with some of these challenges, give us a call. Like, we're happy to partner up with you as a partner and sell you the industrial roll stock. If you're a large multinational restaurant chain and you're not sure how to tackle this issue, give us a call. We're happy to work with you, design products, introduce new materials, produce them here in Canada for you. Or if you've got an established, supply chain, we're happy to work with them and sell them industrial roll stock, introduce a plant-based pallet stretch wrap to them. So, that product authority really puts us on the forefront as a first to market with this type of model, right? We're first to market positioning with this, lots of choice, lots of options, make it easy for a large multinational to say, how do I change? And some of our customers are not getting those options from their current supply chain partners. And we're like, hey, come to us. We're happy to be your full supply chain partner and produce that package or product for you. Or, introduce us to your current thermoformers, and we're happy to work with them. So that's what makes this change easy. That's a classic example of. So going back to the question is, we're covering a lot of components of what's being banned, and provide a lot of options to customers that are faced with this change.
Like you said, people like options. And going back to the 3 ingredient options that you give your customers, what's the growth rate of each of the 3 categories?
They're all really strong. Like the model in order for our model to really be effective and competitive, all categories have to grow. This is not a one category, one material. All of them have to click. And obviously there's impact, third-party impact, like when the COVID crisis first hit us and we were all kind of disorientated with what was going on. We're obviously still faced with some challenges, but we're a lot smarter as a society. Well, when restaurants shut down and hospitality shut down, everything shut down, right? That whole segment of food services, small business segment shut down, but our medical packaging accelerated. We were producing a lot of the COVID-19 testing kits up in Ontario, the packaging for it, not the test itself, but the packaging for the COVID-19. And our food producer packaging took off. So anything tied to the grocery chain, which we all know, we were eating at home quite a bit, and some still are, that really took off. So I think, that they're all performing well. They always could be better, but they're all performing and showing growth.
Well, last year was certainly a tough year for a lot of companies, and I think you showed the resilience through your multitude of product offerings. So yeah, you had a really great year. So
we did, like Q2, which was, I think, the foggiest situation we were faced with at COVID, and we're still getting orientation. Like the GDNP's collapsed 30% around the world. We were up 57%. And I think that's one thing for folks who are new to the Good Natured story. This retail model is designed to prevent downside and create significant upside in revenue. Our strategy is centered on a growth company, and enables that growth to take place because of the upside potential and downside restriction. And I think Q2 is a classic example of the model working. And we continue to build momentum, like 160%, 65% growth last year, really solid margins. Momentum continued in Q1, 160% growth, great margins. And now we completed this acquisition here in May. So we're building off that momentum, and I think that's really important. I know sometimes execution isn't viewed, the idea is more sexier than the execution, but at Good Natured, we think that, serving customers and doing it really well and being very innovative and executing on that is a good way to separate ourselves as a company to our customers, but also as an investment over all the other options that are out there for your listeners.
Mm-hmm. Well, we've talked about it in the past. You're cursed by having a real business that's actually generating a profit in an industry that rewards like blue sky, right? So I think it's a really interesting time post this acquisition. I know you don't like talking about multiples that much, but since we've known each other, the stock's trading at the lowest multiple I've seen it. So I think it's a very compelling story from a valuation perspective.
Yeah, I think it is. Like, we want to make sure, through all of our communication to our owners and potential owners, that we're disseminating this transaction. This acquisition is quite significant. It's it's delivering $33 million on a calendar last year. It's got $2.6 million in EBITDA. So it's really impacted our profile. It added 100 customers. It put on somewhere between $11 to $13 million in assets to our already $70 million in assets. So it's a big deal. And I think it's really important for us to get out there with great, for companies like yours to get the word out and make people aware so they can make an informed decision. And obviously they can, go to our investor at goodnaturedproducts.com to get more information and listen to the acquisition call. And but overall, it's important. Your point you're bringing out is very important. Like, this is a huge deal for us, and not only on what it's brought, but how it's positioning us for future growth. And I think that's something that I want to make sure we do a good job in communicating that, because once these two high-speed lines get put in place in our extrusion facilities, XTEC and our IPF facility, we can process 80 to 90 million pounds of resin material into sheet. That is a big deal. That is a significant material jump in our capability. And so, and also an indicator of what's to come.
Well, I think that's a perfect transition. We spent a lot of time on the acquisition strategy, but there's some audience questions around the organic growth. So dig into that a little bit. One of the questions is, can you comment on your land and expand strategy with current customers? Is there a metric like year-over-year sales growth by customers that points to success there?
Yeah, that's so there's three levers we focus on the organic side, which is land new customers, obviously. And then as you just highlighted through the question, which is sell more products to existing customers. And then launch new products like the ToGo Container, which, sometimes changing the product lands the customer, which opens up. Like we had one customer, for example, who inquired on the ToGo Container. But as they got more familiar with us because of our product authority, we went from a custom, it wasn't the ToGo container itself, it was, can you custom design several products with that material? But we ended up not only, quoting 2 to 3 custom parts, but we quoted 7, I think it was like 6 or 7 other containers to that customer. So, what I can say is last year is we delivered just under 23% organic growth we did 65% overall growth. So that's roughly, what is that? A little over 30% contribution of our growth came from organic. Now, we want it to be 50-50, and I always tell everyone, like, listen, that's our bullseye. There'll be some years where organic will be higher, and like last year, organic was slightly lower than 50-50, but that's our internal goal. And so far, what we're seeing, we don't give, I should also balance, like we only provide organic growth on an annualized basis because there's a lot of timing, and some programs start earlier, some programs start later. So, providing it on a quarterly basis sometimes can be a bit, if I showed, real strong organic growth, could be because I pushed up a couple new program launch, and the following quarter could be, a flat organic growth because those programs got pulled up. So we only do that on an annual basis. Now, how are we doing? It's going really well. Like I always say, it always can be better. We really focused a lot on our deli tubs post acquisition. Those deli tubs are really taking off quite nicely. There's lots of great cross-selling. These we call them our multi-purpose containers, have also had a level of success. And we're quite optimistic about our pallet stretch wrap. Like we think that is a good convenient item to cross-sell to food, producers and growers and retailers. So overall, we're really optimistic. Like we feel like we got a really, good organic pipeline, not just in cross-selling, but also in landing net new customers, which is also a big proponent of it.
So between the food service vendors, retailers, quick service chains, and airlines, where do you see the most significant growth over the next 12 to 18 months?
Well, I think a category that I'll answer by saying we want all of our targeted customer groups to grow. One area that's really showed a lot of growth is growers in food producers. We've entered our growing season, and it's picked up, all across the country of Canada and the US, and we've had a tremendous amount of success from local small 20-acre growers to, we're talking like very large growers. And we're pretty excited about that because, these growers put a lot of effort in creating healthy food products for us. And they're really orientating themselves towards extending that into their packaging and into their fulfillment. So it's not just the packaging itself, but, we're seeing some success in cross-selling our pallet stretch wrap to these food growers. So food producers are also another real strong area. Like we announced our Better Bites, which is a plant-based bakery treat. They're delicious. I've had them. Flax for Life is another one, a very successful food producer out of the Northwest here. These family-run businesses are very oriented towards the environment, and they're doing it for their customers, but they're also doing it for the team members of their firms. They want to show that we're, the people that are working for their company that they're committed to the environment, they're committed to human health, and it's not just about healthy food products. So we're seeing a lot of success in that category too. But I balance it by saying we're seeing growth in all of it, but those are two areas that I'm seeing some stronger pull through on our products.
Okay. And I've got a little bit more of a particular question, so bear with me.
Sure.
Is there a ratio relationship between the millions of pounds of source material and revenue? Is that something that you look at?
It's not the resin, it's more about capacity planning, right? So, when you're running a growth company, obviously our orientation, stating the obvious, is towards growth, right? So if you're growing 160% in Q1, and now with this acquisition, you're growing 300%, and you want to layer on organic growth and support future acquisitions, you have to make sure that your growth, if we had a chart, right, like if your capacity is here, right, going up, this is your available capacity. If your growth starts to trend close to your capacity level, you're going to cap yourself. And so you want to make sure that you always have a buffer between your sales and your available capacity, both in-source and outsource. Our outsource capacity allows us to flex up growth and our available capacity. So that's more of why I pointed that out, because if we intend to grow the company, you have to have the ability through your in-source outsource model to support it. And so we look at that quite regularly. When your capacity, when your growth really starts bumping in your capacity, then you push out your orders, you create large backlogs. Customers don't want that, right? Customers, they're going to wait 12 weeks for an order. I don't think so. That's why we did one of the reasons why we did what we did with the XTEC acquisition. But we look at that more than, it's not a resin, it's more about capacity available to support growth.
It makes sense. And as a follow-up question, are there other equipment upgrades that could further increase production capacity to current equipment?
Yeah, there is. We want to support our sustainability focus on enhancing our equipment over time through modernizing into high-speed equipment. So, for example, we share that we are going to be installing our high-speed extruder at our IPF facility in August, and that extruder can produce about 1,800 pounds roughly. It could be more. It just depends on the thickness of the material. An hour, so it can produce 1,800 pounds of that sheet in an hour, where our current equipment on average is about 800. So if you take the same cost structure and you can produce, almost 2.5 times more material on that same cost structure, it creates leverage in our business model. Now that leverage is either going to hit the bottom line, or is going to free up more cash to invest, or is going to free up margins to get more aggressive in pricing, to grow our business with our thermoform customers. Like, we want to be known to our thermoforming customer base and all of our customers as being a place that creates great quality product at an affordable, competitive price. And I think these high-speed robotic equipment is one way of enhancing that. Now, and we intend to put one in our XTEC facility, and we intend to, extend that and into our thermoform packaging and putting, packing robotic into it. A lot of people say, well, how much money does that cost? Like, that's a lot of money. Well, we don't intend to use equity to finance this equipment. Like, we're going to use our standard 7-year, lease equipment or loan equipment loans that are tied into a cost per pound to pay back that financing of that equipment. So, the payback on some of the equipment depends on whether we transition existing business or we leave that capacity for new business. But that payback is like anywhere between, 16 months to 24 months. It just depends on how we position it within our current customers and how we position it for prospect customers.
How do you think about like when you're weighing out an acquisition or expanding a facility footprint? What's your preference? How do you evaluate that?
Well, I think acquisitions is our first focus, right? I think after that, it's like, can we modernize the equipment in the existing footprint? And then the third would be, hey, can we expand the footprint? Expanding the footprint is it's a longer sales cycle, right? Like construction doesn't happen overnight. And I don't know about you, but I think based off commodity prices, expanding footprint is going to be an expensive proposition. But it's available. Like we do have that option, particularly at the XTEC facility, to put another 40,000 square feet. But yeah, we look at all that. We're very analytical. Obviously, we're very numeric. We're very analytical. It's just math, right? And it may just make more sense to take our capital and deploy it on replacing a piece of equipment before expanding the footprint. But we do weigh all those options.
And one more question about capacity. With the current capacity and planned upgrades, like what do you think your capacity is in a revenue number? Do you look at it like that?
Well, we don't give any real guidance on that other than, hey, we grew 160%. And I think with XTEC, if you look at all the TTMs and historical numbers and you stitch them all together, or just look at some of the great analyst reports that are out there, like Raymond James has got great coverage, Beacon's got great coverage, Canaccord's got great coverage, Paradigm's got great coverage. Like these guys are really good. All of them are really. Singular Research, I want to make sure I don't leave Lisa out. She's tremendous. They give really good perspective, independent perspective. Now, we have to look beyond what's going to get shipped out in a financial year. So when we say, hey, we can produce 80 to 90 million pounds after these two high-speed machines, obviously we're looking into the future to support our growth.
Okay. Well, I think I've beat your organic growth strategy to death. I guess the one question I had, you mentioned leverage in the business model earlier, and you're really starting to show that in your last quarter with revenue growth starting to outpace growth in SG&A expenditures. Is this a trend that we can anticipate for the future? Can you elaborate on the leverage in the business model and where you think you can get to in terms of EBITDA and gross margin profile?
Well, we continue to prioritize growth. So, we try to manage the expectation with our owners to say, listen, we're gonna reinvest. Like we're hiring people to support building our new, I call it new base camp for growth. We're going to be putting in a new cloud-based ERP system. It's for a small mid enterprise. It's not super expensive, but it's not the software that's expensive. It's, we want to implement this. I've done this several times and know the good, bad, and ugly. So we want to make sure we have the people in place to help support it so it doesn't distract our operating team from execution. So I would say, just expect us to continue to invest, expect us to improve our EBITDA on an annualized basis. And if for some reason at some point in time the owner's like, hey, make this thing an EBITDA company, that it's just refocusing the company at that time. And right now we're a growth company, and that means we're going to invest. But I just want to make sure I'm clear. As a growth company, we will improve our EBITDA year over year, but we're going to invest in our people, in our processes to support our historical growth that we've delivered, right? It's like you said, and we met, 2017, we were doing what? A couple $1 million, $3 million. You can't run a $3 million company the same way you're running a $10 million, $12 million, $20 million, $30 million company. Things change.
So investors should be looking at your EBITDA and profitability on a longer time frame, like a year over year kind of basis, rather than quarters, which could be lumpy.
I think so. Like, I think you should always look at our business, for folks that, I know there's probably some listeners here when we were back in the $3 to $5 million mark. the story hasn't really changed, right? The message here hasn't changed. The strategy hasn't changed. The operating model hasn't changed. The business model hasn't changed. We're just executing it. So, you want to take a long view, and I'm not talking like a 10-year view. Like, you've got to realize, like, your investment horizon, you have to choose what you're comfortable with. But we believe we have something pretty big here. And so we want to make sure that we're investing in people. We don't want to burn our people out. They work exceptionally hard. I'm really proud of them. But if we're going to continue an historical growth rate and transform this company into a larger company, it's going to require investment. It's just that simple now. I sound a bit of a broken record, but we will improve our EBITDA. Like, we're going to do it with discipline. I'm a very frugal individual, so we're going to do it with discipline.
One thing that I always enjoy about our conversations, Paul, is your corporate culture comes out so clearly and how you talk about the people that work for you and your stakeholders. I think it's a very core part of the Good Natured story, and it's very.
Well, thank you. Yeah, I think that's really important. Like, I'm an owner. A lot of our team members are owners. I'm one of the strongest advocates of the owners. We're here to create value. We know all of our owners, whether they invest $100 in Good Natured or $5 million in Good Natured, we have to be mindful of that. And they're expecting us to grow this company. That's what they're backing. They're backing a growth company with really great people, great culture, really focused with a very sound strategy and a very sound business model. And we're creating value by delivering growth. Now, same token, we gotta watch our expenses. If we're gonna spend the money, better have a good reason for it. If we're gonna make investments, better get a return on it. And I think we've demonstrated that. Like, yeah, of course it could be better. But I think we've done that thus far. And I think whether it's first quarter or closing the transaction with XTEC on the strategy side, like, I think the team's done a very good job in a say-do ratio. And we're not going to always. I want to balance this. We're going to make our mistakes, but we're going to be a B plus. We're going to be a B plus, and I think that's another way of separating ourselves as an investment choice. Is our ability, our culture, and our ability to deliver on our strategy.
Mm-hmm. Well, you get an A in my books, going from 2.5 million to 60 in a few years. The only other question I had for you, Paul, is just about other market entrants. So are you seeing any other players enter the market, or cheaper substitutes or options that competitors are using?
Yeah, that's a great question. Like, we're seeing a tremendous amount of innovation on the material side. Like, it's really exciting. We're agnostic to the material. We just want to give the choice out there, as I mentioned earlier. We're seeing capacity building in the plant-based materials. We're seeing innovation in plant-based materials as associated with applications. We're seeing downstream innovation, whether it's chemical recycling of plant-based materials. So, I mean, we are in a really good spot. As we size up our company, we become an authority in the supply chain, an expert to our customers, and I think from a competitive set, we're seeing a lot of small emergent companies across the business groups. I think that's an opportunity for us to consolidate. Like, our acquisition pipeline has it's got 20 to 30 active, I would say funnel, and some of them are small tuck-ins, which are popping up that we say, this is kind of interesting. Maybe we can, acquire that company. Maybe it's $1 million. These are all hypotheticals. Say it's doing, maybe it's only $1 million, but it gets us into those categories. And then we plug that category or that company into our overall supply chain and business model, and further accelerate that acquisition's growth. So, do I see anything in the near term that's, threatening us? I don't think so. Like, it's a big industry. Like, there are huge companies here. Like, $1 billion, $2 billion, $3 billion company is not a big company in our space. So I still think we're in the first to market. I think we just focus on our strategy, serving our customers, and being aware, mindful of our competitors and respectful of them. But I think there's just a lot of room for us to continue our growth before we worry about some competitor taking us out. I honestly think someone will buy us before there's a threat that's going to terminate good natured's existence. Like our model's getting bigger, stronger, and I think we just got to focus on executing it.
Yeah, we've done a good job so far. So in January, I asked you what we could expect for 2021. We're halfway through the year. You've delivered on a couple things. Do you want to give us kind of an update on what investors can look for the rest of the year from Good Natured?
Well, I'm going to sound a bit of a broken record. I think I probably sound a bit repetitive. Like, listen, it's going to be a little bit of the same thing. Like, I think we're off to a pretty good start, and I think we're just going to continue that momentum into the back half of the year. Like, XTEC acquisition really set the stage for the back half of the year. It's going to further accelerate our growth. It's going to position our platform strategically for future activities. So, I just think there's more great things to come. I've never been more excited and more optimistic about Good Natured's future for its team members and owners. And I think we're going to have a pretty dynamic. We've set the stage with XTEC for a pretty dynamic back half of the year.
I think it sounds really exciting. I think that's a perfect place to leave it off. If I missed anything, Paul, is there anything you wanted to talk about that we haven't covered today?
No, just a special thank you to you and your team members for arranging this call and helping us communicating our business performance. And it's always a pleasure. And I wish you and all your listeners a great rest of the week and a fun. Get out there and hopefully, I know BC is opened up for hopefully out in Ontario. You guys can get out and enjoy some of this wonderful summer weather.
Yeah, well, I'm coming home next week actually, so I'll be in BC on the 12th. So once I'm out of my quarantine, hopefully do some meetings in Vancouver.
Terrific.
It'd be great to finally meet you in person. And yeah, the feeling's mutual. Every time you come to us to want to do a webinar, there's always a material development. It's always a more exciting story. So really happy to be involved and looking forward to the next update.
Great. Well, terrific. Well, safe travels. We'll see you soon. All right. Bye, everyone.
Thanks everyone for participating. If you have any additional questions that weren't answered, feel free to reach out and I'll get them answered for you. Thanks.